Welcome back to The Explainer. Today, we are tackling something that literally trips up almost everyone when they first get into the crypto space. We're demystifying market capitalization. We're going to look at exactly why this specific metric, not the coin price, is the ultimate undisputed measure of a cryptocurrency's true size and power. If you want to actually understand what you're looking at when you pull up a chart, well, you're in the right place. Okay, let's just jump right into this with a quick mental test. So we have coin A, and it's priced at a highly accessible $1. Right next to it, we've got coin B, sitting heavy at $500. I want you to ask yourself honestly, looking at these two, which one instinctively feels like the better investment? If your brain immediately went for the $1 coin just because it kind of looks cheaper or feels like a bargain, hey, don't worry, you're experiencing a super common cognitive bias. But you also just made one of the absolute biggest mistakes a beginner can make in this market.
And that brings us to a harsh, but honestly liberating truth. Price does not equal size. Picking a coin just because it has a $1 price tag is basically falling for a financial optical illusion. You see, a coin priced at just one single dollar could actually have billions upon billions of tokens in circulation, and if that's the case, its total value is actually massive. It could be worth way more overall than a coin priced at $500 that happens to have a really tiny circulating supply.
So here's our roadmap for this explainer. First, the price illusion. Then, the market cap formula. After that, market cap tiers, cap versus volume, and finally, beginner mistakes.
All right, Section 1. The price illusion and why price does not equal size.
Enter market capitalization, or just market cap for short. Think of this as your lens of truth. It is the total value of a cryptocurrency project, and it's calculated based on its current price combined with how many coins are actually out there in circulation. This is the metric that gives you the full, unvarnished picture. It tells you the project's real size, its dominance, and how it actually stacks up against other coins in the ecosystem. It essentially elevates your perspective, you know? It takes you from just staring at a random number on a price chart to actually seeing the true weight of the project. Let's move right into Section 2. The market cap formula and calculating true size. The math here is straightforward, but it's incredibly powerful. Step 1, you take the current coin price. Step 2, you multiply that by the circulating supply, meaning the actual number of coins currently out there trading in the market. Step 3, that result equals your market cap. Boom. It's literally that simple. Let's actually walk through how this builds using a hypothetical real-world example. Let's imagine we're looking at Bitcoin. And just for the sake of easy math, let's say the current price of one single Bitcoin is sitting at exactly $100,000, right? A nice, round, very impressive number. But as we just learned, that is only half the story. We need that second piece of the puzzle, the circulating supply. So let's assume there are exactly 20 million Bitcoins currently in circulation. When we multiply that $100,000 price by the 20 million circulating supply, we get a massive result. A $2 trillion market cap. And this right here perfectly illustrates why supply matters every bit as much as the individual price. That $2 trillion figure, that is the true measure of Bitcoin's total value in the market. It tells you what the entire project is worth, not just what it costs to grab one single coin.
So, the golden rule to remember here is supply before price. The pros, the experienced investors, they have this burned into their brains. They always check the circulating supply before they ever dare to judge a coin as being cheap or expensive. Remember, a really high price with a tiny supply can actually be a much smaller project overall than a cheap coin floating in an absolute ocean of supply.
Okay, Section 3. Market cap tiers and assessing risk and reward.
This right here is exactly how the pros categorize their portfolios because, well, not every cryptocurrency carries the same risk. We generally chop them up into 3 tiers. At the top, we've got large cap coins, think Bitcoin and Ethereum. Since they have the highest market value and the widest adoption, their risk is lower. They're much more stable. But because they're already absolute giants, their growth potential is naturally slower. Then, right in the middle, we have mid-cap coins. These are usually established, growing projects with really active communities. They offer moderate risk and a pretty balanced growth potential. So, more upside than large caps, but definitely higher volatility. And finally, at the bottom, we have small-cap coins. These are your emerging or brand new projects with the lowest market cap and the smallest investor basis. The growth potential here is through the roof. They can move incredibly fast. But you really got to tread carefully because they also carry the absolute highest risk and, frankly, the most brutal volatility. Section 4. Cap versus volume. Please, don't confuse them. We really need to separate these two concepts because they get mixed up all the time. Market cap is the total value of the project, price multiplied by supply. Think of it like the overall size of a ship. It usually changes gradually over time as the price slowly drifts up or down. Meanwhile, trading volume measures the total traded value. It's the actual buying and selling activity happening within a specific time frame, like the last 24 hours. If market cap is the size of the ship, think of volume as the pulse or the engine activity of that ship. While market cap changes gradually, trading volume can change violently, sometimes within minutes, depending on whether the market is panicking or getting super excited. They sound kind of similar, but they measure two completely different things.
So why does distinguishing between the two actually matter? Because volume equals liquidity. High trading volume usually means better liquidity, which basically just means there are plenty of buyers and sellers actively trading. This makes it way easier for you to enter or exit a position without violently moving the price yourself. If a coin has a decent market cap but zero trading volume, it's a total ghost town. You might literally not be able to sell when you want to. You have to look at both metrics together. Relying on just one gives you an incomplete and frankly super dangerous picture.
Moving to Section 5, Beginner Mistakes, and the specific traps you need to avoid.
All right, let's rapid fire the top 5 traps. Number 1, thinking cheap coins are automatically a better value. A 10-cent coin is not inherently cheaper than Bitcoin if it already has a market cap of $100 billion. Number 2, ignoring market cap entirely and just blindly following social media hype. Number 3, buying a coin purely because its price is pumping, without doing any research on whether the project actually has long-term value. Number 4, confusing market cap with trading volume, which we just untangled. And number 5, ignoring those risk categories we just discussed. Throwing all your money into small caps without fully realizing the wild volatility involved, that can be a totally devastating shock to your portfolio.
So, what is the absolute biggest takeaway from today's explainer? Before you ever hit that buy button, you must check the market cap, always. Compare projects by their total value, not by the random cost of a single coin. Figure out if it's a large, mid, or small cap project so you actually understand your risk exposure. And definitely remember to use market cap alongside trading volume and liquidity. It's an absolutely vital tool, but it's just one piece of a much larger puzzle.
I want to leave you with this final, kind of provocative thought to chew on. When you buy a coin based purely on its price tag without even checking its market cap, are you actually investing or are you really just gambling? Well, armed with the formula and the knowledge we covered today, you are now completely equipped to make that distinction for yourself. If you found this breakdown helpful, be sure to check out the rest of our Explainer series where we dive into all the other essential mechanics of the market. Keep learning, keep analyzing, and I'll catch you in the next one.